Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market recap. Hopefully all of you had a very nice week in the markets, and hopefully you got to spend some very nice time with your friends, family, and loved ones during the holiday period. Now in today's markets, guys, well, we had a little bit of a Santa Claus sell-off, a Boxing Day flash sale, if you will, whereby we did lose a lot of ground in the indexes, but no major levels were lost. I will remind you of the context since Jerome Powell Day, right? We were always in the context of a daily downtrend, always expecting a lower high. Now it's up to the bulls after a very nice bounce to set up the daily higher lows and go for the daily trend changes. But the context was always a daily downtrend, which is why in the last few videos, even though this bounce and rally was nice, I was saying be mindful that we can possibly have a dip, go for the higher lows, and then it's up to the bulls to convert. So I still remain cautiously optimistic in these markets, but once again, price action is king, especially in an environment right now where this week and next week, a lot of Wall Street is on holidays. There's not that much volume in the market, so you can have these outsized moves, which can surprise a lot of people, especially if you've been chasing the market throughout this rally. So in today's video, we're going to do a few things together. Number one, we're going to do a ton of technical analysis, and we're going to start off with an analysis on all of our major sectors, see how they are shaping up, see how the rotation is shaping up in the markets as well. Thereafter, take a look at our big tech names, see how we stand after today's decline. I mean, even though we are down today, guys, it's still been a very solid week, especially since last Friday, and we are green on a weekly basis across pretty much most of your major indexes. And then lastly, guys, we'll take a quick glimpse into my portfolio for a few trades made today, because we definitely did go shopping for this Boxing Day flash sale, and also take a look at a few positions that I'm keeping into next week as well. So a lot to cover in today's video, guys. Let us jump right into the action, shall we? So the SPY down about 1.05%, the QQQ is down 1.33%, and all across the board, as you can see, guys, no sector was spared over the course of the day today. So the heat map was not looking very good. Most of the damage was done by some of the big tech names, Tesla down almost 5%, but the damage was pretty much all across the board, and even the minor sectors were not spared. Today was just one big day of Santa Claus sell-off, but focus on the 1 week, guys. We are up since last Friday. Pretty much everything is considerably up, except for a few key large names across the S&P, but everything was not looking too bad this week. We are shaping up not too bad into next week as well, but the volatility could simply continue. And I will remind you of the context, guys. We have no earnings. There's a earnings blackout period, at least for the next 2 weeks. We also have no macro. Next week is very light in terms of macro until the Friday event where we get the ISM manufacturing. So it will all be about price action, price action, price action, guys, which is why I want to focus on some of the setups that we currently have in the markets and give the expectation for either the make setup for the bulls or possibly the breakdown setup for the bulls as well, leading into more consolidation into the month of January. So that being said, in terms of the one-day relative, you can see that, well, the performance was not very good. Everything to the downside led by consumer cyclicals and technology. But as I said, on the 1 week, we are not looking too bad at all. Most of all the major sectors, except for consumer defensives, have all been green. However, the damage was done by Jerome Powell. And you can see over the last 1 month, we really have not done much of anything. The SPY is pretty much exactly where it was, even lower than the midpoint of November. We have not done a single thing on the S&P 500. The QQs have been largely the outperformers since November, but a lot of major sectors, especially value names, have been severely trailing behind. That is why your 1 month relative kind of looks like this. We'll check back on this when the monthly candle closes. Next Tuesday pretty much is the last day of trading for the month of December. So now let's get into more technical analysis, shall we? So in terms of the SPY, I'll be quite honest with you guys, not much has changed, right? This was the expectation. The context, I will remind you, is the most important thing. Where are we in terms of the higher highs and higher low patterns, and who are in control of the longer term timeframes? So top-down analysis. The bulls are in full control of the monthly uptrend. The bulls are also in full control of the weekly uptrend too. We did not break and close below the last weeks of November, which are your higher lows on the weekly, but we did have a heck of a big pullback after Jerome Powell. So now we zoom into the daily and we can see it was a clear daily downtrend, and we were always expecting a lower high, which is where I bring in the fibs. When we have a very nice bounce like this, a 78% bounce, it gives the bulls a very good chance to reset into a new daily uptrend. A V-shaped formation, guys, is always the unlikely scenario, especially after such a brutal drop. So now the likely scenario is a two-step recovery process of those daily uptrends. So it stands to argue that we are going to have to come lower to possibly reset higher. Now, in terms of the bounce size was very good for the bulls. It gives them the best chance possible of resetting into a daily uptrend, but it is not a guaranteed setup. Now, keep that in mind, right? So we are still looking for the higher lows into possible daily uptrend conversion over the course of next week. However, if the bulls just get eroded, well, I'll remind you, the context is still a daily downtrend until we get proven otherwise. So any further downside follow through will bring us into further downside consolidation into this big support 585 down to about 576. So this is the key moment in time. Step number one, the bounce was good. Now the bulls need to get the follow through to confirm the daily uptrend, to confirm this weekly consolidation is finished, and to confirm at the same time that we are going possibly for another weekly leg higher. Hopefully that makes sense, which is why my positioning remains cautious. I am waiting for red days in the market to be able to write puts under my favorite companies utilizing the wheel strategy. And for any call options, guys, I'm staying very patient and very selective as well. So today's price action came as a surprise to most people, but it was a very logical move after 4 days of rally coming into resistance. Very normal that we try to now set up for the higher lows, for the higher high conversion. The bulls playing nice defense here at the 50 EMA on the daily, which is about 591. So now the next 2 days of trading, guys, are crucial. If we give back too much of this move and start moving lower and lower, well, the retest area of the lows is highly likely. However, if Monday and Tuesday are good and we start moving higher, well, then the daily uptrend conversion becomes more and more likely. Your weekly lows are probably set, and we may move into the early stages of January with a nice weekly leg of continuation. I am leaving the door open on both ends. If the market keeps dropping, I have tons of buying power, and I kept tons of buying power on the side since Jerome Powell for this exact same reason, because we were unsure whether or not we were going to be able to recapture or whether or not we go into further daily downtrends and further weekly consolidation as well, which is going to open up even more attractive levels, which is why I've held a ton of buying power, and I cannot wait to go shopping if the markets keep providing very decent opportunity days such as today. So keep your eyes peeled. The next 2 days of trading are absolutely crucial to determine whether or not the bulls have it in them to get the daily uptrends back, or whether or not we may go lower. And if we do go lower, guys, the consolidation on the weekly may take a few weeks to turn around. This is why it is so crucial and can give us some insights into the next few weeks of trading. Moving on to the QQQs right now, same concept. We had a very nice bounce, right? The context was a daily uptrend. We did not lose the daily uptrend, right? We did not set lower high into lower low, similar to the SPY, where they actually did set the lower low patterns in motion for the daily downtrend. The QQQ is not a daily downtrend just yet. We had a very big flush, and now we also had a very attractive bounce size. Keep in mind, the bounce size was pretty good, about a 65% retracement. It gives the bulls a good chance, a great chance at resetting into a daily uptrend, but it does not guarantee a daily uptrend. The probabilities are on our side, but now the bulls need to prove it. Can they reset into the daily uptrend? Or if the markets keep fading, we will be retesting the lows down here in support, 515 out of 510. And if we flush into the daily downtrend, we are just going for more weekly consolidation. At least the bulls on the Qs have a ton of space for it. Anything at this point above 495, just looking for a weekly higher low for further trend continuation. So the moral of the story, guys, the trends are very clear, right? It's a monthly uptrend. It is also a weekly uptrend on the Qs. It's just the daily where we kind of got blindsided by Powell, and now we need to kind of gather our strength and go for the daily uptrend. Or if the bulls need more strength, they will have to kind of come down a little bit more and consolidate a little bit more on the weekly, gather strength possibly down here in this area around 505, 500, and then we may find a nice base of support. That would be a top to bottom sell-off on the Qs of about 7-8%. And we do have a number of these all throughout the year, as you can see, guys, right? Very normal for the Qs to pull back from the highs, 7-8%. We've seen it many times this year. It doesn't mean the markets are unhealthy. It just means that we need to find new levels to attract new buyers and gather more momentum. Moving on to the XLF right now. So XLF, same concept as before. I'll remind you the context was always a daily downtrend. That being said, the bulls have now set the lower highs, and now it's up to them to play some defense and get the daily uptrend back. The size of the bounce was decent on XLF, about a 61.8 bounce, which gives the bulls a good chance of resetting the daily uptrends, but does not guarantee For that, you need to have the higher lows and higher high pattern daily uptrend in motion. That lets you know that the weekly consolidation is finished, and then we possibly go on for another weekly leg higher. If we cannot do it in one clean shot, I'll remind you, we will need to two-step this process. Financials do not move like Palantir. They move kind of slow. So in the event the bulls need to do this in a two-step process, that would not be the worst thing at all. You can see it many times in the past whereby they struggle a little bit, right? They can't get the follow-through. They consolidate a little bit more, and then they actually get it. So we will see if this time is going to be the same. But all in all, it's up to the bulls to play defense now. If not, we are coming lower. 47.69 to 47.20 is the next area of support, where I will possibly be going shopping for some opportunities in the banking sector. That's not a bank. Bank of America. All of these charts look the same. It's a weekly uptrend looking for the weekly higher lows for possible trend continuation. JP Morgan, same concept, weekly higher lows for possible weekly trend continuation. Wells Fargo, same concept, weekly uptrend, weekly higher lows for possible further continuation. You guys get the drill? They pretty much all look the exact same. The one that I'm in personally is Berkshire. Beautiful range of consolidation, looking for potentially us to bottom out in this range right around the 26 EMA that the bulls have been using since the rally started last October. We've been using this 26 as kind of a fallback zone. Couple that with horizontal support and you get a nice area of confluence where the bulls can gather some strength and some momentum and push us a little bit higher through the month of January. So I am in Berkshire myself. We'll see how that one goes. Moving into healthcare right now. Healthcare was the sector with the weakest bounce and has been the weakest sector for the last couple of months. Weekly downtrend right now is clear as day. And we are bouncing out of support. 140 down to 134 is the big support, is the previous huge monthly resistance from 2021 all the way through 2023. 2 years worth of resistance stands to argue it should be a fairly solid area of support. So that being said, we now zoom into the daily timeframes and you will see, guys, the analysis is pretty clear, right? The bounce size on healthcare has been the weakest amongst the whole bunch. Arguably, the bounce size is only 25-30% barely. So in the event we continue rolling over, do you guys think the likely scenario is the daily uptrend conversion? Or do you think the likely scenario is just the retest of the lows with such a weak bounce? Well, obviously the likely scenario is probably a retest of the lows. Couple that with some possible volatility around the inauguration when we get Trump's policies around the stance on what he plans to do with the healthcare insurance plans nationwide, Medicare, Medicaid, and what Bobby Kennedy, RFK Jr., plans to do in terms of going after pharmaceutical companies for more transparency. That's why I say this sector may be very volatile and very uncertain, at least maybe until the end of January, early February. So although I have started a little bit of a position in UNH, I'm not saying that I'm the most confident in this one. I like the position, I like the level, but I would not be surprised if there can be more volatility, not just in UNH, but in all healthcare names across the board. Moving into semiconductors right now. Semis down about 1.01%. No clear trend, guys. This is just a massive range of consolidation. It's a tale of being trapped between two levels, of course. We're trapped between overhead resistance, 260 to 250, and below support, 230 down to about 220. That being said, no clear direction by the bulls. We are still tightening up in this range, so there's really nothing much to see. If you really want to see the semiconductor bulls come alive, which they should be coming alive in 2025 because individual company guidance is quite good, you need to see a weekly close, a candle close above 260. Only then can you say, perfect, the weekly uptrend is set. We've now broken through resistance and we can possibly get some follow through and then a retest and then a run. That is how I see this sector as a whole. And in the event we do the flip side, if we come down all the way here, this is going to free up some extremely attractive opportunities all across the board, riding some short puts under the market in our favorite semiconductor companies, as I've been doing now for the past 5, 6, 7, 8 weeks, and it's been going very well. Whenever we have a range of consolidation where a whole sector is kind of just muted, one of the best ways to play it is with the wheel strategy, riding short puts under the market. Moving into the Russell right now, the Russell also weak, 1.46% to the downside. And I mean, it's completely normal, right? Look at the IWM sector weightings. I bring this up all the time. Sector weightings, financial 17, industrial 16, healthcare 16, technology 14. When the heat map looks like this, all sectors are declining and all the Russell's major sectors are declining. Well, it stands to argue that they're not going to have a very good time, right? Couple that with the rise in yields and you end up with a recipe where the Russell is fighting too many things at the same time. It's fighting higher yields and it's also fighting its own sectors inside of it, right? So that being said, the daily downtrend is now clear as day. It has been clear as day for a while. I hope you guys can see it from the chart, right? Daily downtrend clear as day. And now the bulls had a decent bounce, but the bounce was nothing fancy. The size of the bounce was only about a 40% bounce. So it does not give the bulls the best chances at all of getting the daily uptrend conversion. Couple that with the fact that where did we get rejected from? Kind of overhead resistance, right? 225 up to about 232, which is the previous resistance all-time highs from 2021 into 2022. So working against a lot of things is the Russell right now. I would not say it's my favorite trade in the market just because of how many things it's working against. Working against the yields and working against unfavorable sector allocation. Financials, industrials, healthcare have been really weak over the last 3 years. A lot of those value components just overall weak in the markets. That being said, we will see, can the bulls protect this and go into a new daily uptrend? Or will we just roll this over, continue the daily downtrend into the lower 216 down to 208? If we come down there, guys, this is going to be the other area where I maybe attempt a trade on the Russell. But as of right now, we're kind of muted in between two levels. Resistance is equal distance above us, and then support is below us. So I would rather wait for a retest of support before any further positioning in the Russell myself. Moving into the Dow Jones now. Dow Jones down about 0.77%. And the Dow Jones, I mean, it's clear as day as well, right? Big daily downtrend. And this was a heck of a move to the downside. Look at the size of the bounce in relation to like the SPY or the QQQ bounce, right? SPY bounce, very healthy. Take a look at this bounce size, 78%. Healthy bounce. QQQ size of the bounce, very healthy bounce there as well. We're looking at a possible bounce size of roughly almost 70%, right? Very decent bounce. Take a look at the Dow Jones and the value names, right? Not a very decent sized bounce. When you put the fib on this, you will see how weak the bounce actually is. Only a 38-40% bounce. It does not give the bulls the best chance at resetting. It gives them a chance of doing it, but not the best chance of doing it, right? So we'll keep an eye on the shorter term timeframes right now. It does look likely that if the market weakness does continue, the Dow Jones is going to be a prime candidate for the daily downtrend rollover. As of right now, we're using our last area of support, 43K, down to about 42.5. This is these guys right there. If we flush below this, guys, we are going for the continuation of this gap fill, which we did do as of the last Friday session. But as of right now, the bulls need to play defense. It is all the bulls' game to lose right now. If you continue this hourly downtrend into Monday, I can sufficiently say that the likelihood of retesting the lows or lower is very likely. And at that point, your next support level is down here, 41,885 with all those guys. The weekly also, they've lost the weekly uptrend as well, right? Weekly uptrend was clear as day. We had the higher lows here. Now we went for the upswing, and now we've unraveled, crushing the higher lows. So it remains to be seen, right? If the bulls cannot get it done and only get the daily uptrend up to here and then roll it over, well, the weekly lower highs are going to be set. And then it's up to the bulls once again. Can we turn this back into a weekly uptrend? Or do they roll over into a weekly downtrend into monthly consolidation? That could be a theme for the SPY and QQQ as well, where January just ends up red. It wouldn't look so awkward, would it, right? Looking just for a monthly higher low in January, and then possibly February, March, April up. QQQ, same concept, looking for a higher low on the monthly, January, early February, and then rally. Wouldn't look so awkward. We've done it many, many times over the course of this year so far, where we go for a monthly pullback before continuation of the rally. So my mantra, which I've been telling my Discord members as well, is for the month of January, early February, guys, we've got a lot of things. We have the Trump inauguration and the follow through of his policies, January the 20th. We have the Fed on January 29th. The following week, with possibly an interest rate pause. And also at the end of January, what do we have too? Well, we have all the start of bank earnings and big tech earnings as well. So many volatility catalysts. There's enough volatility catalysts there to possibly drop the markets for some monthly consolidation, and nobody would be surprised. So the mantra that I've been telling my Discord members and myself in terms of my positioning, guys, is for January, we are hoping for the best, but we are expecting the worst. That means save your buying power and only spend it if you truly see some very juicy opportunities. Be patient, let the market come to you. Moving on further, guys, let's go through our minor sectors. As we can see, consumer defenses, I mean, they were the loss leader on the week. Daily downtrend is clear as day right now. Clear daily downtrend, going for the lower high and possibly retest of the lows. Where do we stand on the larger term timeframes? We've now effectively, right, come right back down into a weekly downswing, and now also possibly forfeiting a little bit of monthly price action here, coming back and retesting 79.31 down to 76.33. We will see if they can find a bottom here. This one kind of looks like healthcare. A lot of prior resistance here, should be an area of support, but it may take a little bit longer for these companies to turn around. Specifically, moving on to utilities now. Well, utilities got hit the hardest from the recent rise in yields after Jerome Powell's speech. Looking very weak on the weekly timeframes, guys, even on the daily, right? Lower high possibly set. Now it's up to the bulls to play defense with the rest of the market, but it's not looking the best, right? Weekly uptrend was unraveled with the big time flush. It is true, we do have support down here, but it may take longer than you expect for utilities to kind of come back around. 76 down to about 72. Utilities, guys, is not my favorite play when yields are supposed to be higher for longer. They hate yields as a whole. Why? Because utilities companies don't really grow their revenue that aggressively. They're really a defensive industry as a whole. A lot of people flock to utilities for dividend yields, right? Dividend yields between 3, 4, 5% sometimes. And right now you're getting 20-year bonds for 4.91%. Why would you buy utilities and have the risk of declining share price when you can just lock in a long-term yield for 4.91? The opportunity cost doesn't make sense, which is why utilities can be a weaker sector moving forward. Real estate, same concept, guys. What does real estate not like at all? Well, higher interest rates. And that's why we've fallen off a cliff virtually in the last 2-3 weeks of trading while the yields have been skyrocketing. That being said, we're trying to find a baseline of support. This is monthly consolidation at this point, right? Still a monthly uptrend, looking for a monthly higher low, but brutal candle close. I would not be surprised if we get some follow through in the month of January, or if it takes longer than expected for this sector to regain some legs. Now, there's some decent opportunities in real estate right now, which is O. O is also coming down into its very big area of support, 52 down to 49. Previous area of support all the way back from 2016. Not too bad of a trade there if you want to be patient with it. And Vici as well, coming back down into its own respective area of very large support. This is 28, roughly down to about 26. But as I said, this sector may take longer than expected to recover just because of the pressure that yields is putting on it. And now lastly, moving into energy. Well, energy we know is going to be seasonally weak. It is always seasonally weak during the winter. Couple that with factor number 2, dwindling of geopolitical conflicts, especially in the Middle East. Trump is about to come into office. We know that he's been running on the promise of wanting to end the wars. Number one, the wars between Russia and Ukraine, and number 2, all the conflicts in the Middle East right now that are currently happening. So that is factor number 2. That is not very good for the price of oil. It's great for the conflict resolution, but not so good for the uptick in the price of the barrel of oil. Additionally, we also have factor number 3, which is Trump coming into office and going for drill baby drill, wanting to increase U.S. oil production. What do you think that does when more supply comes into the market? Obviously, it's going to take a while for those policies to translate into actionable things for these companies, right? But just letting you know, the context for oil over the next 2, 3, 4 months is not the best. You have too many headwinds against us, which is why it's not my favorite sector to play at all right now. Flushing some of the monthly levels, arguably almost coming into monthly downtrend territory with the lower lows. More area of support down here, 80 down to 75. And you can see the energy sector has not done anything for the last 2 years. That is why I usually do not invest in commodity companies, guys. There's just too many external factors at play, which go over and above the fundamentals of specific companies. Moving on. That is it for our sector analysis. Let us dive into yields. So yields as well, guys, pushing up again. I mean, this 10-year yield is probably going up to 4.7, 4.8, and nobody would blink an eye. The Federal Reserve gave us the guidance, right, with the summary of economic projections. The federal funds rate, they raised it. Well, they raised it from 3.4 in 2025 to 3.9, and 2026, 2.9 to 3.4. So the neutral rate right now is going to be higher than expected. So when you increase your projections for the interest rates as a whole, well, that means that these long-term yields are going to stay higher for longer, and the speculation, the bond trader speculation, they're just not going to buy bonds, right? If they know that these yields can stay sticky around here for a while, then what is the rush to currently buy 20-year bonds? There is no rush at all. Couple that with the large debt that the U.S. economy has, which could potentially, in the event of a debt downgrade, these yields are going to go even higher. So there's just so many factors at play here, guys, on longer-term yields. They do not respond directly to policy from the Federal Reserve. I mean, they do to a certain extent, but a lot of this is just pure speculation and just pure sheer supply and demand around 10 and 20-year bonds from the U.S. Treasury. It stands to argue that there's a big opportunity cost right now. The markets have been flying for the past 2 years, so institutions from around the world, would rather just bet on US equities right now than on bonds, especially if they do not see a case in point for a recession scenario. There's too many external factors, guys, which is not, I have not been adding to a TLT position. I don't think it's a bad trade. I just think it's a trade that people I've underestimated how long the bond market actually takes to turn around. So I'm not opposed to positioning down here, but you may need to wait a little bit longer than expected to get those rallies that we've been expecting on the TLTs. 20-year yield is the exact same analysis. I mean, this one is going to 5. A lot of analysts have said this one can stay between 5 and 4.75 for an extended period of time, guys. It's now a weekly uptrend back again. And look at the monthly. We had the monthly downtrend, and now whoops, we're right back here, guys, undoing the monthly downtrend. So now the bulls will have so much work and such a long time to bring this one down, which is why I say any plays for upside in TLT should be viewed for the back half of 2025, at least the back half of 2025, maybe even in the front half of 2026. Now, moving in further, guys, let's cover a little bit of gold. Gold as well, not doing much of anything, right? Gold has really done nothing since the month of October, right? I mean, we have pushed up a few times higher, but all in all, it's just been kind of in this range of consolidation between October and all the way now. Sideways consolidation, very healthy. Gold was severely overbought on the weekly time frame, and that is when you possibly come into some sideways consolidation. It is now a very nice tightening range, and there could be some plays playing the bottom end of that range into 2025. But as of now, no clear trend on gold, and gold is a very funny asset, guys. Sometimes it reacts to inflation headlines, sometimes it reacts against the dollar. Sometimes it reacts as a fear trade when people pull out of equities and dive into gold. Right now, it's a nothing trade. It's not really responding to anything right now, any clear narrative. It's just clearly ranging sideways. So I will wait for positioning in gold, looking for the monthly higher lows for possible further trend continuation. But gold is an asset that can move quickly, but sometimes when it consolidates, you guys know what happens. It can consolidate for a very long time. So I'm just looking for that consolidation, cool down these monthly timeframes. And I mean, oil, we just touched upon it for XLE, has done absolutely nothing for the last 4 months. And I do expect that to continue, guys. We have a big level of support down here, 69 down to about 60. But there again, too many catalysts working against the price of oil, which is great for us as consumers and great for companies alike that use oil as an input cost for their production. But anybody who's betting on oil trades right now, you may need to push out your timeline for some appreciation on those trades further than you may expect. Now, moving on to Bitcoin. So Bitcoin, not wrapping up the week just yet. I'll remind you, the weekly candles for Bitcoin close every single Sunday, not every single Friday. But Bitcoin right now, guys, doing a whole lot of nothing, as you can see, right? Just kind of range bound. But we know the context right now is we are currently trying for some sideways consolidation, trapped between two levels, trapped between 101 and 98 overhead resistance, and trapped well above here, 91 down about 88. One thing's for sure, if we come down here, I will be buying the dip. As of right now, no clear trend direction from the bulls, just really sideways price action. So the way that I'm playing this one is I'm writing puts under the market on some of the Bitcoin proxies, writing short puts on BXX down there, writing short puts on MSTR, way down here, guys, because we know Bitcoin can just all of a sudden flush 5-6%, and that would be completely normal. So I'm playing these, you know, with a decent margin of safety. But when we have some sideways consolidation, it's a great time to farm some premium under the market on some of the Bitcoin proxies. Myself personally this week, I've used BITX. All in all though, no clear trend. The trend is on the higher time frames. This is a nice weekly uptrend looking for a weekly higher low, still weekly consolidation mode. This is why I say the weekly fallback level, 91 down about 88, 12 EMAs down there as well. It would look pretty, right? Pretty good if we just find a weekly higher low and then go for a little bit of an uptrend swing into the first half of 2025. So right now, just healthy consolidation in my opinion. Ethereum, exactly the same as well, right? You know, big move down here, big daily downtrend for the bears, right? Daily downtrend, and now we're kind of just range bound. So in the event we come and retest this range, we have a lot of support down there, 32 down to about 3,000, and also the daily 200 EMA is right there. So, I mean, consolidation is at the bottom end of this downswing. It doesn't show a lot of strength at all. So we would not be surprised if we do retest these levels. And if we do retest these levels, I've been playing Ethereum with the following trade. I've been playing Ethereum writing short puts on ETH, which is 2 times leverage ETF on ETH. I've been playing it way down here, guys, at $6, writing short puts way down there for some juicy premium as Ethereum continues to consolidate. It doesn't look the strongest right now, I will admit, But where we have to focus is on the higher term time frames. Weekly is in a very nice weekly uptrend right now, constantly looking for a weekly higher low for possible weekly uptrend. But this is a big move, guys. In my opinion, a V-shaped recovery is somewhat unlikely. I mean, it's crypto, anything can happen, right? But maybe more of a two-stage recovery process for the weekly uptrend into overhead resistance, 4,000 down to about 3,800. And the same thing for the rest of the altcoin market, right? So look at this Bitcoin dominance chart. This is Bitcoin dominance, percentage of Bitcoin in the whole landscape of crypto. It's the same thing as how much of a market cap does Apple have in relation to the rest of the SPY. You can see this weight here. Well, this is Bitcoin's weight in terms of all crypto assets combined. You can see Bitcoin represents 58% of all crypto assets right now. So what we want to see, if you guys want to see the altcoin rally, is we need to see a progression of this weekly downtrend, right? It was a weekly arguable uptrend for almost 2.5 years. Now we get the flush, but now that we need to get some follow through on that dominance. That doesn't mean that Bitcoin needs to go down. It just means that Bitcoin needs to either go up slowly, goes flat, or slightly down, and altcoins start outpacing. If you can see the weekly downtrend conversion and start retesting some of these lows, and we start retesting down here and even lower, that's when you know that altcoins are due for a possible nice little rally. Now, the context is weekly downtrend going for the weekly lower high and then follow through. So I have been building positions in altcoins the last 2 weeks with the altcoin sell-offs for the possible recurrence of an altcoin rally in early and mid 2025 as well. This is the time where I'm accumulating, although slowly, I am accumulating a lot of positions on my favorite altcoins, and the focus is on this dominance chart, guys. This is the key. This is the kicker. If you want to know when the altcoins are ready to rally, putting in that next new leg, just look for the drop on this weekly time frame. We're looking for the downtrend, daily downtrend, and that will mean a possible another leg down on the weekly. So now is a decent time to be building some positions on some of our favorite altcoins. I mean, they're all the same, right? Huge drops in the last 2 weeks after 4 or 5 weeks of rally. So now we will be looking to possibly buy these dips for another leg up to the upside, but give it some time, guys. Be patient. Don't spend all your money at once. Moving on to our big tech names, shall we? So moving into Apple, down about 1.32%. Not the worst day for Apple, but Apple did need some consolidation, guys. We were pointing this out, right? This was bearish divergence. Whenever you have lower highs on the RSI and higher highs in the price, that is what we call a divergence. In this case, it's a bearish divergence. Usually the price on the chart corrects in the direction of the RSI. So the downswing was highly probable. Overbought conditions on the daily on Apple, but who's in control here? Well, it's the Apple bulls, quite simply, right? Beautiful daily uptrend, looking for a daily higher low for possible further trend continuation. Now, the problem comes if we give back too much of this move, you open the door for lower high into lower low, but we will tackle that when we get to it. As of right now, the bulls are in full control. Even on the weekly, not looking too bad. Beautiful weekly uptrend. So much space, guys. Even if we roll over on Apple, I want you to understand how much space the bulls have. Anything above 221 would be looking for a weekly higher low for possible further trend continuation. So I would be sitting down here, roughly in the 240s. If it happens, that is where I will make a swing trade attempt on Apple for some follow through into 2025. But up here, very extended for me. Weekly overbought conditions, right? Not the best. And the PEG ratio right now should be sitting at about a 3.5 around 250. The valuation is high. The chart is high. So for me, no swing trade. I'm still holding all my long-term Apple shares. I love the company, but right now the risk reward setup is not the best in terms of a short-term swing trade, of course. I mean, you can argue that you can go for the trend follow through, but the risk reward, guys, as we keep pushing up and the weekly chart keeps looking like this, the risk reward profile is skewing more and more towards heavier and heavier risk of a more extended pullback. So just be cautious on that one. Moving into AMD right now, well, the whole market was red and AMD found a way to close green. It wasn't always like that. AMD pulled back all the way to 122 today, but found a way to close the day green. So this, guys, is going to be another masterclass in inter-time frame analysis, right? So monthly, remind you, top down, monthly is a downtrend. Weekly as well is a weekly downtrend. So keeping that in mind, the daily as well was a daily downtrend. So if you want the bulls to go up, they need to reverse all of the time frames one after the other, and it all starts on the lowest one, all starts on the daily. So daily downtrend, where's the lower high? It is right there. Now we measure the size of the bounce. The size of the bounce right now was a good bounce, about a 70-75% bounce. Not a bad bounce by the bulls at all. Gives them a good chance at getting a daily uptrend back, but does not guarantee it. So now it's up to the bulls to prove it to us. Can they get the daily uptrend by coming above 127.50? If they do get the daily uptrend, perfect. Now we know the weekly lows are set. right? Because unless they set the daily uptrend, guys, we can just go into lower high or low, or sorry, lower high, this high, lower high, right? Lower high, and possibly just go into the lower low flush, and nobody would blink an eye. Why? Because it's a monthly downtrend. It is also a weekly downtrend too. So the bias is bullish until the bulls prove it to us with the daily uptrend. The bias remains bearish. Excuse me, right? So it's up to the bulls to prove it to us now. If they can convert, then we measure the size of the bounce on the weekly in relation to this guy right here, which is your lower high. And then if we can get a nice size bounce, same concept. It's up to the bulls to reset the weekly uptrends. And then they have to do the same thing on the monthlies. So it goes to show how long it takes to change a monthly downtrend into a monthly uptrend. It takes months, guys, months, right? And it all starts with this time frame right here. So in this process, I do remain bullish on AMD just because of the risk reward profile. The valuation right now at 125 is very cheap, and the thesis for the expansion on AMD is the following. The analyst price targets are all above. Why are they all above? Because they have an EPS expansion thesis from the data center RAM and a revenue expansion thesis as well. These should be some of AMD's best years they've ever had in the last 10 years. Remains to be seen if they can do it over the next 2 quarters. So right now, if we want to take a bullish bet on this thesis, well, the risk reward is a lot better here than it was here or than it was here, right? So now's the time that I am personally bidding, but feel free if you don't like the company, if you don't agree with the thesis, then by all means, stay away. This is just my analysis, right? I am writing short puts under the market in the teens. If we follow through a little bit more downside, this is where I'll be averaging to more call options as well for the expansion of the thesis into 2025 and early 2026. But as I said, it can take longer than expected to get the lift that we are looking for. So keep that in mind on AMD. All in all, not looking the worst right now. And the further support, if we come below, is once again 115 down to about $100. All of these guys down here. Now, moving on to Amazon. Amazon with another day of consolidation. And I'll remind you of the context once again. The context was always a nice daily uptrend until we lost it after Jerome Powell. Then we got this big flush. Now, we are expecting lower high because a V-shape after such a big decline is always the unlikely scenario. So we're always expecting a lower high. Where was the lower high? Well, the lower high was a very attractive bounce, right? About a 70% bounce right there gives the bulls a good chance, a very good chance of setting a new daily uptrend, but it does not guarantee it, right? In the event we roll over on Amazon and flush these lows of this week to 1977, what is the context on the weekly? Well, the context is just a weekly uptrend. We would be looking at that point for a weekly higher low for further trend continuation. So if the bulls lose this on the daily, I don't want anybody panicking. Just focus who's in control here on the monthly timeframes, right? And who's in control on the weekly timeframes as well. It is the bulls. Further support down there, 215 down to about 207. Not looking that bad. The valuation at 220 is also quite attractive for Amazon, and Amazon should be having an amazing year, guys. Most free cash flow ever, most profitable net margins ever, very solid AWS growth. This is from last quarter, and the guidance for this year in terms of net profit margins and free cash flow are amazing. Amazon has never done this before, guys. They've always been a top-line revenue growth at all costs. What does that mean? They want to grow the top end of the revenue at the expense of net margins, at the expense of free cash flow. They did not care. Now they have pivoted. In the last 2 quarters, they've said, listen, now we're going to focus on free cash flow generation for the company and EPS and net margin expansion, aka Amazon is now wanting to be as profitable of a company as possible. They've never done this before. It used to be top line revenue growth at all costs. Now focusing on profitability could be some very juicy surprises for some Amazon shareholders, especially with a low valuation like this coming into 2025. If they severely increase the EPS and severely increase the free cash flow yield, could be quite juicy coming forward. Moving into Google right now. Google, same concept as Amazon. Daily uptrend was clear as day, lost the daily uptrend by flushing these lows, and now we were looking, can the bulls recapture, right? It's all in the size of the bounce to reset the daily uptrend. A V-shape is the unlikely scenario, so measure the size of the bounce on the daily. Daily bounce was a very attractive one, about a 70% bounce, give the bulls a good chance of resetting into a daily uptrend, especially when the confluence is the previous all-time highs, 12 EMA, right? It gives them a good chance, a lot of confluence factors of resetting into a daily uptrend, but it doesn't guarantee it. So in the event that they cannot get the follow through for the daily uptrend and we roll this over into next week, guys, is it the end of the world? No. Who's in control of the weekly timeframes here? The weekly bulls. So much space, guys. Anything above 165 is looking for a weekly higher low for further trend continuation. So I'll set the context right away. Don't say I didn't warn you. If Google and the rest of big tech, if they all pull down, right? Look at this. Apple, if they all pull down early January, right? Same for all of these. If they all pull back, I want you to understand who's in control here. The long-term bulls, the monthly, full bulls, the weekly, full bulls as well. And there's a while until they lose that. If Google comes back down mid 180s, I will be buying more Google down here and writing some short puts as part of the wheel. As of right now, it's a little bit rich, not in terms of the valuation, because the valuation is cheap. But in terms of going for swing trades amidst the January uncertainty, I would rather be a bit more patient, let the market come to me. And for that reason, I'll only be going very heavy on Google down there. I already have my Google positions, guys. I'm not adding more unless the market comes back to my level. That being said, 196, very low, very decent location to add some long-term shares. The valuation is extremely cheap for this company right now. So that is the analysis on Google. Moving into Meta, give me a very brief moment. Moving into Meta right now, down about 0.59%. Not the worst day for Meta, but also not the best day, right? You can see this candle here. Look at this candle. They came all the way down into about the 590, and then they pushed all throughout the rest of the day, closing, down still 0.59%. But at one point in time, Meta was down almost 2.25. So not the worst day for them, but same concept as the rest of everything, guys. Daily downtrend after Powell. Now we got the bounce, but Meta's bounce was very weak. And I was saying that yesterday. The bounce size was not as strong as some of the other big tech names. It was only a 50% bounce. So it gives you 50-50 chances of resetting into the probabilities, right? Resetting into the daily uptrend. Now we do have a little bit of confluence. The bulls are using this support box right there, which is prior resistance, current support, and they're using a combination of the moving averages to act as confluence to try and establish a base and go for the daily trend change. In the event they cannot get it done and roll over and smash through this area of support, where are we heading, guys? Well, quite simply, we're heading towards the lower end of these guys down here, right? The whole 555 down to about 520. This little pocket, that is the next area where I will be shopping for Meta. Meta is not looking too bad right now. They're still trying to go for the weekly higher lows for the weekly trend change, and we have not lost this level of support just yet. The bulls still have a chance, but if I'm going to be a cautious investor and wanting to get the best entry opportunities, I'm going to be waiting for some maybe monthly higher lows, and that for me would be down here about 545, 550, down about 530. That would be a position that I would not mind picking up Meta in. But for some long-term shares, if you're just looking at DCA, I see no problem with DCAing. Meta, very decent valuation, and the forecast for next year is extremely, extremely good. Moving on to Microsoft right now. So Microsoft was down almost 2.5% today. Microsoft has just been underperforming the whole market this year. As you can see from this chart, it's fairly obvious, right? They've done nothing since the month of January. And trust me, it's not because they have not been improving their fundamentals. Every quarter, more and more revenue. Every quarter, protecting or improving their margins. Every quarter, better free cash flow. And every single quarter as well, improving EPS, beating on the estimates, and improving the revenue as well. They've been improving their fundamentals this entire time. And look at the next 4 years of outlook. Microsoft is not going anywhere, guys. But Microsoft this year has been a very rare year for them, underperforming the SPY. Take a look here, guys. The year-to-date performance. Sorry, I'm fiddling through these way too much here. Where is there it is. Year-to-date performance, 15%. They're underperforming the SPY and performing the QQQ. Usually that does not happen. Microsoft, the context though, is still not looking too bad. We're trying to establish a baseline of support using all of these previous resistance levels, this green box, 435 down to about 422. We're trying to use it as support. However, the context, I'll remind you, right? This was a nice daily uptrend. We lost it with Jerome Powell. As with a lot of things Jerome Powell did, we lost it. Look at the size of the bounce on Microsoft. Size of the bounce on Microsoft, I said it yesterday, was not the strongest. Barely 50%, arguably, because they didn't really close anything there, arguably like a 40, 38% bounce. Not the strongest bounce. So it gives the bears a good opportunity of flushing the lows and continuation for the daily downtrend. And that's exactly what happened today. So daily downtrend still trying to react from the support zone. We'll see how it goes. And if we do continue consolidating on the weekly time frame, anything above here, anything above 410, looking for a weekly higher low for further trend continuation, but pull back too much and lose this resistance range, which is now support, lose this. And unfortunately, this becomes resistance once again, and Microsoft gets put right back where it's been trading all year, which is pretty much trapped between this range, 420 and roughly 405 to the downside. If Microsoft comes back down here, I'll buy more. I did make a little bit of a bid today on the drop, and I'll show you that. I'll show you guys that in a few short moments. But Microsoft, Such a solid company, guys. I think this is going to be a big winner in 2025. The guidance looks fantastic, and we are just trying to accumulate. This is one big zone of accumulation. Usually when companies accumulate for this long with improving fundamentals, usually that is bullish, and usually you do get a very nice upswing in the future, but it can take some time, guys. Very healthy monthly consolidation, in my opinion. Moving on to Netflix right now. Netflix not looking the worst today, but also not doing anything fancy, right? 1.8% to the downside. I'll remind you the context as well. Daily downtrend, very healthy bounce by Netflix. It gives the bulls a good chance, a great chance, as a matter of fact. This was almost a 100% move, right? 100% engulfing bounce. It gives the bulls the best odds at resetting the daily uptrend, but does not guarantee that that will be the final outcome, right? So in the event they cannot get it done, cannot convert, well, and we flush these lows down here, 889, daily downtrend simply continues, and then we look to the weekly consolidation as well. The context is this very gorgeous weekly uptrend. I'll remind you, just been 3 weeks of largely sideways consolidation, and this chart looks really healthy, guys. I mean, Netflix absolutely tore through the levels, and now where are they consolidating? After this size of a move, have we pulled back here and consolidating here? No, we're consolidating at the top end of the move. It shows the bulls want to protect this zone as much as possible, possibly to go for another leg higher, moving into the $1,000 range. So not looking the worst, but still no real trade for me here on Netflix. If we do pull down, maybe towards the 12 EMA, I could be tempted to make a little bit of a scalp trade for some further upside, but as of now, Netflix looking great. I'm not buying any long-term shares anymore. I'm just holding what I have, but I'm definitely not selling any because the outlook for Netflix in 2025 is going to be looking very, very good. And the valuation here at about 900, not the worst, but a little bit rich in relation to other tech names such as Google and Amazon, of course. Moving into NVIDIA right now. So NVIDIA down about 2.09%. And this as well, guys, I'll remind you the context, right? Context was always a daily downtrend. Then the bulls got the daily uptrend. So now this is daily uptrend, looking for a daily higher low. Anything above 128, looking for a daily higher low, protecting the moving averages right now, NVIDIA, but they need to get their act together and go for the conversion. Where do they react off today? You can literally draw a line where they reacted, and you'll see it's come up a few times in the past, right? Support, support, support as well, right? So this area, this price action area, 135, the bulls want to play some defense there. Need to get the daily uptrend follow through by cracking above 142. That'll be daily uptrend follow through and possibly going for some weekly uptrend reversal patterns, right? But the context is still a weekly downtrend, I'll remind you. So when the context, guys, is a weekly downtrend as a whole, something like this, right? It stands to argue the bulls, they have to take a while to reset this. Either you're going to get a V shape and then set the higher lows and run, or you're going to set some shallow higher lows and go for the two-step recovery process on the weekly. What that means for me as an investor is if we come down lower, every time we dip on NVIDIA, I'm writing short puts under the market. I prefer the 125 and lower level to be writing short puts. I did buy a leap call contract on NVIDIA recently, and my next DCA for them will come down here 119 to 115. I'm not saying it's going to get there. I'm just saying that that is my desired DCA level for some leaps. I bought one here yesterday at the lows. We're pretty much almost break even on them. We'll see what happens. If we come down lower, perfect. I have the wheel strategy. We'll be writing some short puts, getting some premium. And if we come all the way down there, I'll load up on a few more leaps. But NVIDIA, not looking the worst right now at all. It's just been kind of sideways roughly since the month of October. 3 months of consolidation, guys. And where are we consolidating? Consolidating at the top end of the move, looking for a monthly higher low for further trend expansion. Should be a good 2025 for them, but really needs the whole sector to come back alive. Moving into Tesla right now. Tesla with a 5% drop because analysts were saying that, let me just see right here if we have it. Analysts were saying that they missed on deliveries, right? So the deliveries here, what analysts were saying, their delivery numbers are still not out. They'll be out on January the 2nd. Analysts are anticipating 510,000 deliveries, slightly shy of the company's $515,000 or 515,000 cars, right? So we'll see if analysts are correct or if the company can surprise once again, but that was a reason for what some of the decline today. I'll remind you of the context, right? Beautiful daily uptrend by the bulls, got the higher low, got the bounce, and now it's up to them. As I was saying, right? This was a pretty big pullback. It takes a lot for the bulls to really manifest and go for the daily uptrend continuation. If anything, they may need to take a little bit of a breather and do it in 2 steps. But now with this pullback, guys, the best case scenario is, of course, that daily trend conversion back to the bulls. The worst case scenario right now, and it's looking likely, is a daily downtrend. Is that the worst case scenario for the bulls? Well, in terms of the price action, yes, but is it that bad of a thing? Not truly. Take a look at this weekly, guys. Weekly uptrend is clear as day right now, looking for a weekly higher low for possible further trend continuation. Tons of space, right? Anything pretty much arguably above 330 is just looking for a weekly higher low for that continuation. So can we see a little bit more consolidation into Tesla as they have their earnings coming up in just a few short weeks, right? 22nd of January. Yes, we absolutely can. The run has been beautiful so far, but I would not be surprised if Tesla just maybe goes into consolidation mode. I also wouldn't be surprised if the bulls just go on a tear, but if we do further consolidate, I will be sitting down here. If we come down into this range, into the weekly support level, 410 down to about 380, which is prior all-time high resistance, should be newfound support for the bulls. If we come down into it hard, I'll be looking to play some short put opportunities down there. And as a matter of fact, I already did take a little bit of a position on Tesla today using one Tesla product that is not Tesla. I'll show you the guys that in just a few short minutes when we go over the positions. All in all, though, Tesla not looking too bad. But of course, the valuation right now a little bit extended, and the bulls a little bit extended on the weekly. And also we're extended on the daily timeframes. So a bit of a pullback, bit of consolidation is perfectly normal after such a substantial rally. And lastly, Palantir also coming down on the course of the day. No major news, but we know the context is a nice daily uptrend, looking for a daily higher low for possible further trend continuation. So now we're pulling back into support. 12 EMA, you can see they love tagging the 12 EMA before a possible next leg of rally. So we'll see. Does Palantir have it in the tank to react from the 12 EMA, react from prior resistance, which is now support, talking about 78 down to about 75. We will see if they can find a base of support and go for another leg. If they pull back too much, though, guys, you open the door for the lower high into lower low, and that opens up the door as well for more weekly consolidation. Any case is good, guys. I have shares either way. If we go higher, perfect, I'm in. But in the event we roll this over the next few weeks of trading into the month of January, look at this monthly. Eventually, this monthly is not going to keep going up in a straight line. Eventually, we will need 1 or 2 months of either sideways price action or slight downside consolidation. And if that happens, I will be ready, going to shop for some shares. Possibly, if we do pull down into the lower 70s, I'll go shopping maybe in the mid 60s for some short puts using the wheel strategy. But we are very overbought on the weekly time frame, no secret there. So it's just a byproduct of the overall market. If the overall market goes into weekly and monthly consolidation, what do you guys think Palantir is going to do? You think if the SPY and the QQQ go into weekly and monthly consolidation and January is a bad month for the markets, do you guys think Palantir is going to be able to do it on its own and just rally as if nothing else is happening around it? Probably not, right? So this is a prime candidate. If it does pull back, I will be waiting to go shopping down here in the lower 60s. And that's pretty much everything. But as of right now, the bulls are in full control. No red flags. I'm just giving a possible guidance as to what I will be doing if Palantir does make the eventual move down. So that is everything, guys, for the daily market recap. Now let's look into a few trades, shall we? So before we get into the account, one of the trades that you will no longer see there is Micron. Micron was a trade that we opened a few short days ago, a wheel trade, and we did close it today, early this morning when the markets were red, and I just used the buying power for somewhere else. We had the 87 puts wheel strategy for 37 cents. We got this one just a few short days ago on the 24th, right before the holiday on Tuesday. We were able to close that, guys, for a very healthy profit this morning, 70+ % profit, closed it at 7 cents, and reallocated the capital. This is the only trade that you will no longer see in the portfolio. Now let's dive into the portfolio. But it's been a very good week. It was a very muted week for us, right? Because the market started going up early on in the week, and we just had a rally. And you guys know me, right? I like to play the pullback. So being in the fact that it was a shortened holiday week, there wasn't that good premiums for the wheel strategy. We didn't do that many trades, right? We did have all 4 wins, though, on the wheel trades. BITX, Microsoft was a big win, MU, Micron, and SoFi as well. All wins, no directional plays like you guys are used to seeing. I have a lot that are running. I just didn't close any this week. That's why these are all closed trades, right? And no earnings. So obviously there was no earnings, no lottery plays either, because it was a very muted week of price action, right? Not that, we didn't get that many aggressive dips, which is where I like to go shopping before today. But today I definitely did go shopping. So that's why I said in the recap here, small week due to the Christmas holiday, didn't chase the market, waited patiently, and Friday dip opened up tons of trades. Up nicely on the covered calls we have against our leaps, and approaching next week with tons of buying power and new trades from today. Enjoy your weekend. So very light week, but we did make some money, guys, with the wheel strategy. That's why it's the backbone of my account, right? Very easy to run in any market conditions, but if we're looking for volatility, we got it today, and we did go shopping. So now let's jump into the portfolio to see which trades that I did put on. So in terms of the portfolio, guys, you'll see that there are a few new trades, but let's go through each one individually as I do every single Friday. So the AMD bull call debit spread is for February 170, 175s. We opened this like 2.5 months ago, guys. We put a lot of time on these. The position is all but lost right now because AMD unraveled. Didn't set a stop loss on anything. That was probably my mistake for that. We'll see how it plans out, but as of right now, guys, not looking the best on this trade right there. And that's pretty much everything for that one right there. Moving into AMD right now, we do have the 140 leap call, December 19th, 2025. At the 140 strike, we got it just the day of Jerome Powell, before he spoke, as a matter of fact. We're down on that one right now, but as I said, I have a bullish thesis for the company expansion in 2025. We'll see how that one goes. We also have a long duration short put contract that we opened about 2 weeks ago on AMD, 120 short puts for $3. Got some very nice premium. They're currently profitable right now. We'll see how it ends up. 2 weeks of time left on this contract. I would not mind being assigned with an average cost basis on those of 120 minus 3, which would be 117. Would not mind being assigned the shares. I'll run some juicy covered calls on them if that's the case. Amazon as well, we had the leap call. We bought this one a while back, 185 leap call for January of 2026. And as you can see, the day after Jerome Powell, as you've seen before, we covered this one up. 474 in premium, and now we're up decently on the covered calls, so they've been acting as some good protection against those leaps. Now, ASML as well, this is a trade that we opened a few months ago too. The position is almost all but lost, but I only had one single contract. It was looking very good before the day of Jerome Powell, and now unfortunately it has unraveled. So this one most likely will end up worthless, guys. I mean, we can salvage a little bit of money right here, but all in all, this one would be another loss. So not too bad. You guys have seen I've made a lot of wins in the account, but I do end up with the occasional losses that I just don't close early enough. This one was looking very, very solid before Jerome Powell, and then kind of it just unraveled, right? We were almost there, almost back to break even. Pushing into this level, I was looking for a little bit more, $10 more, and I would have closed this spread at break even or slight profit, and now we've unraveled. So I'll let it run its course in the event it does come back a little bit, but that one will probably end up at a loss. The BITX one, 44 puts. These ones were for today. They expired worthless. We collect all the premium. We also have a BITX for next week as well. 45 short put under the market. We got 60 cents for them, and now they're trading at roughly we got 57 cents. They're trading at roughly 60, so roughly kind of break even on those. We'll see what happens. Wouldn't mind picking up the shares. Berkshire is a new position that we started early on in the week for a value play recovery. Call debit spreads 470, 475s for the end of the month of March, pretty much. Not looking too bad. We're pretty much break even for all intents and purposes on this position, down slightly. ETH, this is my play on Ethereum, right? $6 short puts using the wheel for this one. We got 34 cents for this one. We are up on the position ever so slightly now, but if it comes down and assigns me, I do not mind. That would be roughly equivalent to me buying Ethereum around the $2,700, $2,800 range with the premium received. I would not mind buying it down there for a swing trade to the upside. EVVTY, we averaged into this trade a few short days ago with 10 more shares after the drop. I'm not too sure if I showed you this one, guys, EVVTY. So we averaged into this one after the drop, and now it's not looking too bad. We're almost back to our average cost of about $82.29. It's currently under right now, but I will be looking to ride this one into possibly the 100, 110 level. It may take a while, but I like this company, solid fundamentals, so I'm still in. Onto Google, we have the 135 leaps that we're up a lot of money on, well over a 2x on this one, but we protected them the day after Jerome Powell with some juicy covered calls for the end of the month of January. $8 is what we received in premium. We're currently up on the covered calls, so they're doing wonders in protecting these leap call contracts, which are expiring in September. Moving on, Intel is just the asymmetric bet for the recovery of the company. These are for the 2 years from now, December 2026, so we'll keep them. Coca-Cola, still down on these Coca-Cola trades, but Coca-Cola, I'll remind you, it's a very slow mover, right? This is a monthly analysis trade. We're looking for the monthly higher low for further trend continuation, but it could take some time. Coca-Cola is not Palantir. It moves slow, so we're still in the 65 calls. We're down on these contracts, but we'll see what happens with these value names in the next 1, 2, 3 months. KWeb, same thing. This is my bet on the recovery of the China stock market as a whole. I gave myself 2 years for this thesis to play out. We didn't get the lowest price, but we got a decent price. We're down on them right now. I left some room to DCA. I'll throw probably maximum another 5 contracts at this trade, and we have a lot of time on these, so I'm not too nervous. Eventually, China will come back, and I'm giving them 2 years to do it. MCO, this was another swing trade that we started just over the course of the early portion of the week, just identifying some value names that I like a lot and some names that I like a lot. Going for the weekly support level that we've been maintaining since the month of August, just going for a little bit of weekly trend expansion on one of the most solid companies in the financial data space. We're currently up on that position right now, but not by a lot. Microsoft. So we already had the call debit spreads. We remember we had 5 of these, closed 2 at the highs. We closed 2 on Microsoft when Microsoft was at the highs here, about 450 almost, 448 is when I closed them. And the other 2 out of 5. So I closed 2 here, and then we closed 2 the day after Jerome Powell here, just de-risking, protecting the gains, because possibly we wanted to buy them back lower. That's exactly what I did today. So we still have 1 remaining contract here, a runner that I left open. We've already made profits on this one a lot. Now, this is the new position, guys. So we went again with the same call debit spreads, a couple strikes higher, 440 versus the 445s, this time with 1 month more time, March. 2 contracts, $2.16. And right now we are currently, well, I'm not too sure why it's saying we're under by, this is a mistake, right? We haven't lost all the money right away. So I don't know why Interactive Brokers is showing this. They're roughly around par right now. We went shopping on them when Microsoft was down today, and we went shopping for them. We bought them exactly around 1040, something like that here. So we are up on that trade a little bit, but all in all, very decent level. Hit my level that I was looking to go shopping for. If we come down lower, I will just buy more of these contracts. So much time on them. March, guys. It's literally almost 3.5 months of time. I think Microsoft has a good chance of recovering before then. So we'll see how that one goes. Willing to add 2 or 3 more contracts if it does go lower. Micron, these are just asymmetric bet plays for the recovery of the company. We bought these so long ago, guys, back in September. So I'm just letting them ride. We're down on them now. At one point in time, we were up like 2-3x on these, but I'm willing to let these ride. One of them for June, one of them for June 2026. I may even add to the Junes for the 210 calls, because when semiconductors have that rally, if Micron goes into 130, 140, 150, these contracts will be up a lot. So I only started off with 1 in the event that this happened. I will be looking to maybe add a couple more contracts for that asymmetric bet for the expansion of the company into 2025 and 2026. NVIDIA, these are assigned shares that we got at 137 a few short weeks ago. And we've been doing wonders in managing the assignment, right? So this was a wheel trade that we got assigned at 137 with 79 cents input credit premium, which is why the average cost is 136.22, right? So that being said, look at all these average into it, right? Covered calls, first batch, we had an average down attempt. Usually I go for an average down when the stock is down 15% from my initial assignment. I got that the week of Powell, and we made some good money. So we add that to the tally. Covered calls this week were good, and then we rolled them forward for next week again for another $1.50 in credit. Our total average cost right now on these with all premium received is $131.49. I could close this position right now and be well within my money already, but I'm choosing to continue to roll with more covered calls. So we'll see how this one plays out, but so far so good. Oxy, this one is just, we closed 1 contract back in, geez, it must have been early November for like 550. So we've made some profit on these calls. We're just holding the remaining position into March. We'll see if these oil companies can have a recovery. I'm willing to hold the rest. Even if we take a total loss, guys, overall, the position we might have lost, we closed like $250 of profit already, or about $200 of profit. If we lose this, we'll be down like roughly $100. So not the best trade as of right now. Should have, in hindsight, closed both. I left a runner, and now we kind of got burned on this second runner. But all in all, I'm willing to leave this trade open because the total loss would really not be that significant. So I'd rather just leave this one open and see what happens. SMCI. So here are the new trades from the wheel trades today. You'll see that I went very light. I'm leaving the door open. If the markets continue consolidating into next week, I've left the door open to DCA into all of these positions with much more size. But as of right now, I went small. SMCI, 1 contract, 27.5s for next Friday. That is a significant ways away from the current market price and into my area of support down there. SMCI 27.5 by next Friday is all the way down here. That would be roughly another 13% drop on SMCI into my support range. I would not mind being assigned the shares, but I went with 1 contract and we got roughly 16 cents for them. So above our 0.5% rule, I'm happy with that. Now, SOXL, same thing. Because of the semiconductor sell-off, we got 14 cents for the 24 puts, guys. 24 short puts at the low of the day I fired this trade off of. And look how much room we had by the time we wrote this order, right? We had an additional, right, 16%. The SMH would have need to drop 8% into next week. Now we have a lot better margin of safety. Right now, the margin of safety is 20%. So right now we're up nicely on that position. We got 14 cents, which is above our 0.5% rule. Minimum was 12. We got 14. And now where this position is pretty much deeply into profit. If semis have one day of bounce next week, we should be able to close this one for 2 cents, 3 cents, pocket all this premium and go find another trade. Very small contract sizes, guys, because one day of dip is nice, but not enough to convince me to go very heavy on these trades. Now, we also have the SOXL leap call option. Well, not leap calls, just directional calls. May $25 calls, which we offset with some covered calls against them after Jerome Powell. So this position is completely covered. Best case scenario, right? These covered calls, the SOXL just stays muted. We collect the covered call premium by the end of January. We reduce our average cost by $2.60, and we just ride these into May. That's how I'm looking to play these. So all in all, not much damage is done to this position at all. We're largely covered moving into the next month. And now Square, same thing. You guys remember I had 4 of these call contracts, closed one at $15.5 about a month and a half ago, closed one at $20 just a few short weeks ago, and now they've pulled back. So we closed them at a profit. Now we've pulled back. After Jerome Powell, I covered the 2 remaining ones with some covered calls here for the end of January, 102 calls against the leaps, and we got about $2.32. This, now the covered calls are profitable, over 50% in profit right now. So it's been a very good endeavor to have those covered so far. Just reduces our cost basis, adds a little bit more profit to this trade. So all in all, not a bad trade. TLT, this was a hedge that we put forth in the month of October for a resurgence of inflation, right? And the Fed having to possibly cut interest rates if the economy dives into recessionary territory. This is the hedge. And now you can see the hedge has lost all of its value. I would rather hedge a $100,000 exposure portfolio with like $2,000, $3,000 of bonds, right? So this was a hedge play. The calls not printing, unfortunately, we've now lost most of the money on the January contracts. These will probably be worthless. We lost $2,000, but it's a hedge, guys. You're expecting to lose money, right? Whenever you pay for home insurance every month, you don't expect your house to burn down every single month, do you? So you're paying for insurance. It's just natural. And we also have some Junes, but even the Junes are not looking too attractive, guys. I may re-enter this trade at a certain point, but it's just not ready right now. The hedges, unfortunately, did not work in the desired fashion. However, they served their purpose, right? The rest of the portfolio is up far more than the $2,700 that we lost on this hedge over the course of the past 3-4 months. So they've served their purpose. Now, lastly, we also have another trade, TSLL. This is Tesla 2 times leverage. We went under the market. We wrote 23.2 puts for next Friday for 17 cents. You'll see the contracts are roughly the same place that we bought them at. So Tesla, we got them at almost the low of the day. Where's 23.20? 23.20 is all the way down there, guys. How much of a decline does Tesla need to have? TSLL needs to come down 26%. That means that by next Friday, since this is a 2 times leverage ETF, Tesla needs to go down 13%, guys. 13% by next Friday. Where would that bring us down into? Exactly where I want to actually buy some shares for a swing trade if we get that big of a sell-off. How many contracts did I do? Even though I can do 5, 10 of these contracts if I wanted to. I was about to do a Tesla contract as a whole. I was about to spend, we were shopping for the 375s, 370s for next Friday. This would have been 37,000 in buying power. I have no problem spending 35, 40 grand on Tesla. I do it fairly regularly. That being said, you can see the size of this contract, very small. Why? Because if Tesla continues moving on further, I will just DCA more and more into this position, get more and more premium. As of right now, you can see we got almost 1% in premium for that size of a margin of safety. So a very decent trade, respected our 0.5% rule. I'm playing these in a conservative fashion, waiting for the market to come more and more into me so I can build these position sizes heavier and heavier and get more and more premium. That's why all of these look a little bit light right now. Uber, this is the assigned trade that we got assigned at 66 a few short weeks ago. We had some covered calls for this week. They expired worthless pretty much. So we now reduce our average cost from 65.59 minus 61. Our average cost is roughly under $65. Not too bad. We will see. Uber is still not in the territory where I can DCA because my DCA has to come in 15% lower than my assignment. I'll put my assignment line right about, I'm clicking the wrong button, right about here. So you'll see if I want to DCA only 15% lower, it has to be like mid 55s. So right now we are too high to be able to write some short puts down here. There's no premium down here right now. And we are also too far away to write covered calls. So it's just nothing to do right now. It's just kind of been sideways between 2 levels. Come up higher, I'll write covered calls. come down lower, I'll DCA into the position. Makes sense? Perfect. Now, moving on further, we do also have the Leap call contract for June of 2026 that we bought when Uber was down here at 60 bucks. We bought this one, the Leap, as you can see, we are currently up a little bit. We bought it at 12.11. They closed at 12.71. We're up a little bit, but pretty much almost break even for all intents and purposes. And then lastly, we have the UNH and the WM call debit spreads. These are both started on the Monday position. UNH is up a little bit. Waste management is down, but I took all these value trades to have a recovery in the value sector, right? And they're all very solid companies. Waste management, big retest down here of this level right there, right? 204 down to roughly 197. That is huge weekly support since the month of February, guys, and coming into daily oversold. So I fired off the position on Monday. Right now it's break even. And the same concept for the other one, which is UNH. Daily oversold was being had. We waited for the daily uptrend recapture. We bought the trade here. Now it's up a little bit, but the bulls have a ton of work to do. I'm just looking to close this one if we can retest in this resistance. 540, 550, I'll close this trade at a very healthy profit. I'm not looking to hold this one for a very long time, but I still left a lot of time on the contracts. March for the UNH and April for the WM. These are call debit spreads, a way to make a directional play on a stock without putting up too much capital, but you can still make some good ROI on the capital employed. So that is everything for my portfolio. Hopefully some of these gave you some inspirations maybe for some swing trades. If you enjoyed today's video, guys, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We do these every Monday to Friday after the close. So hopefully you learned something. And if you did, consider subscribing because we do these videos all the time. And lastly, if you have any questions at all, guys, on the market, now is the time. If you have any questions on some stocks, some options, the macro right now, the setups for January, just please let me know down below in the comment section. You guys know me. I usually always answer within the first 24 hours. So leave your comments down below. And in the event that you guys want access to all of these trades in real time, right? These are all the trades that we made this week. These are the trades from prior. The check marks are wins. Obviously, past performance is not guaranteeing future results. I would never do that because none of these are financial advice anyways. These are just my trades. But if you want to be inspired by these trades, if you want to have access to all these trades, the wheel trades, the call trades, the short-term calls, the long-term leap calls, the long-term portfolio plays, the call debit spreads, the credit spread strategies, all of the strategies, because I do all of them, depending on your account size, of course. Well, the link to the Discord is down below. We also do private morning live streams every morning from, Monday to Friday for about 1 or 2 hours. Today, we went 3 hours deep, live trading, answering everybody's questions in real time. These have been very helpful for a lot of our members. And yes, they're recorded. You can watch them thereafter. And in the event you cannot attend and have access to all the trades in real time, well, I also have a position tracker that I update every single night after the close to let you guys know what I opened today, closed today, etc. Saves you from waiting for the video YouTube recaps, of course. And we also have many more things, private videos as well, and chat with me all day, guys. If you have any questions on your stocks, your options, you can ask me questions all throughout the day, and I will answer you with screenshots of charts and all that good stuff. Much more than I can do on YouTube, of course. So if that is something that interests you, no pressure, of course, the link down below to the Discord is in the description, of course, and we have a 30% promotional coupon for your first month. 30% off your first month. The coupon code in all caps is Santa. I will extend this. I give it a little bit of thought. I will extend it, guys, into Sunday night, just because a few of you maybe have been on vacation, spending time with your family. Maybe you haven't seen the promotion or whatnot. So I'll leave it until Sunday, but that will be it for the foreseeable future in terms of promotion, guys. Probably no more promotions for months and months and months. So in the event you wanted to try out the Discord, you do get 30% off your first month with the coupon code Santa in all caps. I'll leave it down below. That's pretty much everything for me, guys. Enjoy your weekend. You will see me for a couple of videos this weekend, but all in all, spend some time with your friends, family, and loved ones. Make the most of this holiday period, guys, because come early January, into the volatility, into earnings, we need to be locked in, right? So spend the most time right now, rest, relax, get your mindset on, build a watch list, build a shopping list of stocks and levels that you want to buy them at. And then come January, we have to be locked into these markets. And if the dips come to us, we have to be ready and positioned with a very stable mind to be able to buy these dips accordingly. So keep that in mind. Take care. That's it for me. I'm out. Love you guys and peace.